Today on the Blockchain Report, Bitcoin sitting around 111K and the internet just blue screened itself after Amazon outages took down everything from Coinbase to Disney+. Trump says the ceasefire in Gaza is still holding, which is an interesting way to describe ongoing explosions. And our sister company Roxom just launched Bitcoin-denominated futures, letting you trade gold in the S&P 500 in real money instead of melting dollars. All that and more right now on today's show. Let's get into it. Good morning, my crypto degenerates, hodlers, and hopeless leverage addicts. Welcome back to another week of the Blockchain Report. I'm Hank Hudson, reporting live from the city as beautiful as it is overpriced, San Francisco, California. It is Monday. Bitcoin's hovering around that 111K mark. Your caffeine's fighting for custody of your brain. And yes, the markets are somehow both bullish and bored. Now, before we dive in, I want you to hit subscribe, follow RoxomTV, and Hank at RoxomTV, because if your market strategy still involves TikTok influencers yelling, load up, you're basically volunteering for liquidation. All right, so here's what we're talking about on today's show. In just a bit, we'll be joined by Stephen Big Beat Orr, who's going to break down what the charts are really saying after Bitcoin's flash crash and rebound in the last week and a half. We'll have the Federal Reserve is hosting a payments innovation conference because nothing says we get it now like the Fed asking crypto how money works. And again, Roxom just launched Bitcoin-denominated futures on gold in the S&P 5, officially turning your dollar-denominated wealth into historical fiction. All right, so we set the tone for the week. Now let's check the charts and see how much money we're up or down in this morning's market rundown. Let's go. All right, it is Monday and the markets bring us tidings. They're good-ish. Bitcoin's up about 1.5% in the last 24 hours, so it certainly seems like things are moving in the right direction. But right now, gang, I want to talk charts because nothing says I understand Bitcoin like pretending you know what a Bollinger Band is. So right now, we're diving into this week's on-chain data. Now, this is the stuff that separates the traders from the tourists and honestly gives us a real read on what's happening beneath the memes. So let's get started and bring up our first chart here. Now this chart shows the short-term holder MVRV Bollinger Bands, which is a fancy way of saying how emotionally unstable short-term traders are feeling. It measures how far Bitcoin's price have drifted from what recent buyers paid for it and wraps that in volatility bands like a mood ring for market sentiment. Now, when this orange oscillator we're seeing hits the top band, short-term holders are bathing in unrealized profits. Or in other words, everyone's euphoric, Twitter's calling for 200K, and we're probably a little overheated. When it hits the bottom green band you can see there, it means that short-term holders are crying in their cornflakes. That's your classic capitulation zone, usually where rallies are born. Right now, Bitcoin's hanging around the oversold green area after rejecting at the orange heated zone just a few weeks back. That rejection triggered a $16,000 pullback, just enough to ruin everyone's weekend, and now we're retesting the lows. Price stabilized, it bounced, but hasn't reclaimed the short-term holder cost basis, or STHCB, just yet. That's the red line on the chart, currently sitting at the 113.2K mark. Now, if Bitcoin flips that into support, bulls, well, they're very much back in business. If not, we risk another rejection and another round of Bitcoin's dead again headlines. Next up, we have chart number 2. This one is pretty simple, but it's absolutely crucial, okay? This one is the short-term holder cost basis chart, okay? This basically is the average break-even price for everyone who bought Bitcoin in the last 5 months or so. Above it, momentum's looking pretty bullish. Below it, bears are in charge and everyone's tweeting bear memes again. Historically, when Bitcoin's price holds above this red line we're seeing, good things tend to happen. When it falls below, though, bad things happen, like you panic selling the bottom, for instance. Right now, the line's at 113.2K, and Bitcoin's just below it, around 111K. That means the market's in a bit of a tug of war right now. Bulls are trying to drag it back above. Bears are guarding that level like it's Fort Knox. If Bitcoin can reclaim 113K and hold it, that's the signal. Momentum is back on, baby. But if it gets rejected again, we might be in for another few weeks of sideways chop and bad takes on X. And that brings us finally to our last chart. This is the Cycle Extreme Oscillators chart, also known as the Are We Euphoric chart. Now, this combines 8 different metrics: the MVRV, the SPOR, the Puel multiple, reserve risk, funding rates, and a few others you pretend to understand at dinner parties. Now, when 4 out of the 8 light up, the chart flashes warm. When 6 out of 8 go full red, it screams overheated, usually right before a local top. Now here is where things are getting kind of interesting. You see, back in March of 2024, we got a warm signal, just like in the early stages of the 2017 run-up. Since then, even though Bitcoin's made multiple local highs, we haven't hit another warm or overheated trigger. That means one of two things. Either this is the calmest bull market top in Bitcoin's history, or the top just hasn't happened yet. Now, given what we're seeing on the STH metrics and the Bollinger Bands, the data is leaning bullish right now. So what's the big picture here? Well, as I see it, Bitcoin's not breaking down, it's just catching its breath right now, okay? So yeah, price failed to reclaim the short-term holder cost basis, so short-term things are still feeling a little bit shaky. But if you zoom out, and on the macro on-chain structure, it's still looking pretty good. So every time we've hit this oversold green zone on the MVRV bands, Bitcoin's bounced right back up. And these cycle oscillators are whispering that this bull run might still have one big leg left to run. As long as we hold this region up and flip that 113K line back to support, the odds still favor upside over despair. So yeah, the doomers are declaring another bear market, but the charts say not so fast. Because in Bitcoin, what looks like the top usually ends up being intermission. All right, we're taking a quick break, but when we're back, we're getting into this morning's bull run with our top stories, and in just a bit, we're going to be joined by our big guest of the day, Mr. Stephen Big Beat Orr himself, to help him make sense out of all of this market madness. All of that and more coming up right here in the Blockchain Report when we return right after this.
It runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at Roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
All right, welcome back to this morning's Bull Run, where we go over the top stories of the day. So let's get into it. Got a lot to talk about. And in case you haven't noticed, at this point, the internet runs on about, 3 companies. And one of them is Amazon Web Services. And well, they had a bad morning. A major outage hit early this morning, knocking down big names like Amazon, Snapchat, Coinbase, Disney+, Reddit, and Canva. Because apparently one day, I know, right? Because apparently one data center in Virginia had the power to ruin everyone's day. The first reports hit at 12:11 a.m. Pacific time this morning, tied to AWS's US East 1 region, their main one, of course. AWS blamed DNS issues with DynamoDB, which in non-nerd speak means the part that tells your computer where everything is fine. CNN broke it down for us. Let's take a quick peek at this video.
And that's basically it, right? So they connect the business to us, the consumer, through apps on your phone. So if you're waking up, you're tapping on an app, you're like, how come it's not working?
Exactly.
This is likely the problem.
You're getting like the ring of death.
Yeah, the ring of death.
Exactly.
They're actually saying, please submit to technical issues. Keep doing that, even though we're not answering them right now, or we are trying to get to them. There's basically a huge backlog. As you just said, there's been some significant progress in this. This happened way overnight. So there has been some, significant progress, but still there's a huge backlog of all these apps and all these companies companies that are looking to basically get restored. So there's even issues at the airport. I'm hearing about people who are trying to check into their flights and they can't because they can't do it through the phone. So there's so many different companies, as you've just listed a whole bunch of them: Amazon, AT&T, Delta, gaming services, right, like Roblox, even cryptocurrency companies are being affected. Coinbase essentially saying, don't worry, your money is safe. So there are companies now having to also just kind of respond to consumers at this point. But like you just said, what Amazon Web Services is saying is that they are seeing significant signs of recovery, and they're continuing to work towards that full resolution, and they're going to continue to provide information as we have been seeing overnight, continuous updates. But like I said, there are still a huge backlog here. So if you wake up and you can't figure out why something is not working, this is likely the culprit.
So yeah, the internet had a collective meltdown because one region tripped on a cord. Experts say there's no sign of a cyber attack. It was an operational fault, not a breach, and data appears to be safe. The problem wasn't the data, though. It was the map of where to find it. Still, it's a reminder that when one cloud provider sneezes, the entire web catches the flu, because centralization might make things efficient right up until, it doesn't. And President Donald Trump says the ceasefire in Gaza is still very much in place, even after Israel launched new airstrikes and both sides started accusing each other of violating the truce he personally helped broker. So technically, it's peaceful, except for, all the explosions. A Fox News reporter has a recap on how the Israeli government says this latest conflict started. Let's take a peek.
Israel says Hamas has violated the ceasefire agreement by launching a rocket-propelled grenade and sniper attacks against Israeli forces within the enclave. The Israelis have already responded, striking targets in the southern and northern parts of Gaza. And we do have some new information for you. The office of the Israeli Prime Minister Benjamin Netanyahu releasing a statement just minutes ago saying there was a security consultation held after that violation with the top security echelon here in Israel and the country's defense minister, and that the prime minister has instructed the military to act forcefully against terror targets inside the Gaza Strip. We're getting a similar statement from the Israeli military saying the IDF will respond firmly. So we can expect more Israeli strikes throughout Gaza later today as the Israelis try to set a new precedent with Hamas that these attacks will not be tolerated within the Gaza Strip. Remember, the Israelis still control around 53% of Gaza as part of the phase 1 of President Trump's peace plan in the Middle East. That is expected to change if the plan moves forward. But the Israelis are committed, they say, to striking Hamas if there are violations to the agreement. Already we've heard from top Israeli ministers, including Itamar Ben-Gvir and Bezalel Smotrich. They are encouraging the prime minister to return to war. We should be very clear here, though. Just because Hamas has violated the ceasefire agreement doesn't mean the deal is over. These ceasefires are never pretty, and there are often violations to them, but we understand that it still remains in place. And Hamas is releasing a statement of their own saying they weren't aware of any sort of movement in the southern part of Gaza. But the Israelis, like we said, are expected to respond later today. Hamas still must release the bodies of 16 hostages as phase 1 remains underway. Overnight, 2 additional remains were released by the terror organization. As this moves forward, though, there are questions about how negotiators are going to be able to hold together this agreement. Remember, the president, as part of this larger plan, is still calling on Hamas to lay down their weapons, to disarm and leave the Gaza Strip, or to commit to peace. With the violation today, certainly this raises tension across the Middle East, but it does not mean that the deal is over. The latest information that we have this morning, this violation took place according to the Israeli military. And again, we can expect more Israeli response later today, likely in the form of airstrikes targeting Hamas inside the Gaza Strip.
Meanwhile, Trump also insists Hamas's leadership might not have been involved in the alleged attack, suggesting rogue militants may have crossed what's called the yellow line, which Israeli troops have been building with yellow painted barriers in their military control zone in Gaza. The line covers over 50% of that strip. Meanwhile, special envoys Steve Witkoff and Jared Kushner arrived in Israel to meet Prime Minister Netanyahu because nothing says stable ceasefire like sending the real estate guys to take care of things. Vice President Just Dance Vance and Second Lady Usha Vance are also reportedly packing their bags for Israel as well, because apparently everyone is in on this field trip. But on the ground, things don't look so peaceful. A Gaza Health Ministry spokesperson said at least 23 people were killed Sunday in Israeli attacks. Hamas denied involvement in the Rafah incident, claiming it's still committed to the truce. The group accused Israel of fabricating flimsy pretexts for more strikes. In response, Israel accused Hamas of committing 80 ceasefire violations, saying those had killed dozens and injured hundreds. Meanwhile, Hamas's failure to return all hostage bodies has stalled negotiations for the truce's next phase. Now, both Hamas and the Red Cross say finding remains amid Gaza's rubble is nearly impossible. So, sure, the ceasefire still seems to be in place, I guess. And after months of tariff tantrums and social media meltdowns, President Donald Trump confirmed that he'll meet China's Xi Jinping at the APEC summit in Seoul on October 31st. And yes, the date being Halloween is probably not a coincidence. This
Israel
comes
says
right after Trump called Xi an amazing man and said their meeting would make a great movie, which is true if that movie is Fast and the Furious Trade War Drift. Oh, that sounds amazing. I love those movies, especially with new characters. It looks incredible. But investors, they didn't wait for this sequel. Bitcoin jumped about 2% after the news. Now, this rebound comes after the worst crypto liquidation event in history, a $19 or $20 billion wipeout triggered by Trump's earlier tariff threats. Market sentiment had fallen to a 6-month low, with the crypto fear and greed index plunging to 22, a level known in the industry as call your mom. But the minute Trump started saying nice things about Xi again, the markets did what they do best, and that's forgot everything that happened 48 hours ago and started buying the dip. So, yeah, whether it's diplomacy or dumb luck, the Trump-Xi summit is already moving markets before it's even started. And once again, Bitcoin proves it's the only global asset that rallies faster than a presidential mood swing. And all of this comes as China sets new restrictions on rare earth metals that could threaten U.S. defense. Let's roll the clip, guys.
According to the Center for Strategic and International Studies, China accounts for 90% of the world's rare earth metals processing and nearly 2/3 of the world's mining of those materials. So how critical is it for these talks to go well? What kind of leverage, if any, does the U.S. have?
Trump sounded very calm in that clip that you just played, which I think obscures the fact that beneath the surface, things are incredibly uncertain right now. And it's not just because of the rare earths controls that China dramatically expanded since coming back from its mid-autumn holiday, October 9th. The U.S. Commerce Department has also unveiled a new U.S. export control targeting potentially tens of thousands of Chinese firms. So we are right now in the midst of a escalatory cycle where, Trump wants to meet with Xi. He's sending his envoy to meet in Malaysia with the vice premier this coming week. But beneath the surface are incredibly thorny issues that are going to have to be negotiated in order to actually achieve that level of stability.
So timing-wise, did the new Chinese restrictions come about because of this trade war, or has this been in the works from the Chinese president for a while? I mean, does this indicate to you a larger move from China away from its ties to the U.S.?
So, Alex, I think that actually gets at two separate realities that U.S. and Chinese policymakers are living in. I was just in Washington last week, and if you ask policymakers in Washington, they will tell you that China rapidly escalated things with the expansion of these rare earths controls, specifically because they are extraterritorial. If any product made anywhere in the world contains trace amounts of new Chinese controlled rare earth materials, they now have to get the green light from China. So that's the Washington perception that China did it. If you ask people in Beijing, they'll say China was just responding to the fact that the US broke its agreement or a tacit understanding not to unveil new tech restrictions on China. And the US Commerce Department is the one that escalated. While they live in these two different realities of who's to blame for the latest deterioration, I think it's going to be really hard to walk back from the cliff's edge.
So the Chinese government specified it's going to deny any imports of its materials if they're for defense use of other countries. So what does this mean for U.S. physical and cybersecurity? Could it cripple U.S. defense capacity in any future developments?
Well, it depends how they implement it, right? And it's not just defense technologies. These rare earth materials are potentially controls are going to disrupt the global auto supply chains, for example. Electric vehicles, they've announced new controls on lithium batteries, which are part of the core of any electric vehicle made anywhere in the world. And they're also saying they're going to target new AI applications. So it's potentially much broader than the defense industries. Now, Beijing has said, everybody calm down. We're not going to go that far. We're going to give licenses. And I think they're doing that to try to maintain leverage and maybe some flexibility if things do look like they're working out with Trump.
Now, the White House here is hoping for a workaround, right? And this morning, Australia's Prime Minister is meeting with Trump, where he reportedly is pitching his nation's vast resource holdings as a solution to China's rare earth curbs. U.S. officials are also in talks with European allies, Canada, India, and Asian democracies to partner up against China's new restrictions. All right, we're taking a quick break, but when we're back, we're going to be joined by Mr. Big Beat himself, Stephen Orr, who's going to be telling us what is going on in the markets and what we can expect from Bitcoin as we make our way through this unprecedented Q4. All that and more coming back right after this quick message. All right, welcome back. It's time for Market Check with Mr. Big Beat himself, Stephen Orr, joining us. Stephen, how are you? Happy Monday. Thanks for joining us on the show.
Happy Monday, Hank. It's good to be here. And I think a lot of times Mondays get the Monday blues, but no, I think this is great. 2 weeks ago, I'm on your show and the NASDAQ, and I said, look, 126, 125, like this is high for a Bitcoin to the dollar, right? And I was like, you know what, takes a profit off, and look what happened, kaboom. We've got some whales. In the last one we talked about this, the whale that's been shorted a couple of times. Okay, did the first time, but we got you the second time. Here's what's happening. You're seeing a lot of these original gangsters out there going, hey, you know what? The market of the world isn't as good as everybody thinks it is. Let me take this opportunity to take some liquidity out of the market, and they did that. So they hit us the first time, and that's great. Why? Because we had already taken our profit. We beat them to the punch. Why? Because the chart showed us that. Why? Because we were listening to the markets. We were listening to news. We were taking the whole thing into perspective, and we had beat them to the punch. When they figured it out, and if they were doing it, came out with a big $76 million and, of course, $100 million punch to the shorts, kaboom, they got it. And, guess what we were doing? We were buying it back, and now we are. Here we are. And I've been buying it at 110.5, and I bought it 805, and now 105.5. So I'm averaged in here. I'm still buying a little bit. I took a little bit off of that pickup from the 105.5 era. But right now, I'm still long pretty heavy. I think we go back to 118, 120, 126, probably within the next month or two. Get ready, because I think the next big move is to the upside, and a big one.
Okay, well, I'm glad to hear that October might still very well be intact, because this has been kind of an interesting 10 or so days, right? I mean, we saw the big flash crash the Friday before last. We cratered all the way down to, I think, even 102 level on some exchanges. Right now, we're sitting at around 110, 111. So it begs the question, Stephen, right now, does this feel like a healthy cool down to you, or are you maybe seeing some early signs of exhaustion in the trend that we're seeing this year?
Yeah, I mean, I kept getting asked over the last few weeks, is this October? Is this October? And I'm like, no. I didn't even have to explain why. In when the FOMO was hitting and the euphoria was going through the markets, that's when I want to be out of the markets. I don't want to be in the markets. I like boring. Okay, when you're investing, I like boring because boring is what makes money. When you get excited, you're going the wrong way. Probably a lot of times you're just chasing, and you saw the chase a lot in this side. And when you saw the liquidation happening, you hit all of those leverage. The lever 100x and 500x and 1000x. It's nonsense. Don't do that. What you want to do is you want to pick up things when the markets are falling like this. It's always charts are always bottom left to upper right. And so we're seeing that again, but maybe not in the exact way that we all expected because we're expecting October. And I said no to this. Well, I'm going to share my screen right now. I'm going to pull it up here. There we go. Hopefully you guys can see this screen as it's coming up. And when I'm pulling it up, you can see that what my thought process was. So here we are to the downside, and I've been looking at this for a while. Now, this is a daily chart on Bitcoin, right? But here's what I'm saying. Look at this. MACD is telling you flat out we're going to get a big move to the upside. The last time this happened was September the 5th. And look what happened. Kaboom. Right? We saw it again. We saw it again in October the 1st. Kaboom. Now, here we go one more time. And this is what I'm saying right now. You're seeing it starting to turn. The volume is starting to turn, and it's going to be nasty to the upside. It's going to be very fast and very solid. And what you're going to see is probably back to the 120 handle here, somewhere around here, which was back in August, and also here 120 to 121. Then we're going to break through that, and then we'll get to the 126 again, 126.3, which is this is where I was selling at 126.8 and 125.5, and that's where I was pretty much right in this area right here. I did not like this. I thought it was a little frothy, and I thought the change was happening, and I saw these numbers happening. So here we go again. I think we have a nice move. Now I get there's some sellers in here, and I'm going to pull up a 3-minute chart, and I get all of this. I get that there's some selling and scared cats and no diamond hands. But put those diamond hands on. Put those gloves back on because they're trying to scare you out of the market. They're trying to take your Bitcoin out of your hands. There's only 3 places that you can get Bitcoin from. The Bitcoin on the market that's out there to purchase and to sell. The other one is if you're actually trying to lever up and they're giving you the leverage, so you can do that. And the third way you can do it is if you can take the money from someone else, the people that are selling into the markets. I want to take that money from them, right? If they're scared, the first thing Warren Buffett says is a market, no matter what market it is the most intelligent way of transferring money from people who are not patient to the patient. Because you have to think about the future, not what's happening right now. And right now, people are scared again, and I get all that. Great. Guess what? I'm picking it up. I'm not picking it up to about 108, 108.5, right here. 109 to 108, 107, here, right in this area. That's where it's at. Now, this run this morning, I took profit off early this morning. I woke up at like 3 a.m., Hank, and that's part of being a trader, is waking up and hearing those alarm bells saying, hey, so 111, great. The Bitcoin I picked up at 111.5 and then picked up at 108.5 and then picked up at 105.5. I was excited about it. So I took that off and I'm looking to get back in. Now, again, I'm not going to get back in heavily again till about this 109.2. That's about where we're going. The short here, you can see some of the volume is picking up a little bit to the downside. Great. Not scared though. We've got to get out of this linear regression area. Now I'm going to show you a 1-hour chart. And this is what you're seeing. The sell signal happened about 30 minutes ago, and there it was. And then people started selling at 111.4. I was already out by then, 111.3, as I've been talking about it. But you can see what they're doing. I'm going to draw a line here and show you on this 1-hour chart. This is what's happening, right? They're just scared. But here's what's happening on the other side too, right? So this is why I'm saying I'm going to pick up something around 108 area. I'm not going to try to time the market. I don't time the market. So this is where I see it's going back to, and then I see it pushing higher. And then I see 113.3 and then 116, and then right back up here to 122, 121, which I'll be reassessing at that point. But I think we go right back on up. Now, grandma and grandpa, aunt and uncles, they're looking to pick it up. Institutions are picking it up. Tom Lee told you that. He's picking it up. Saylor is now back in buying Bitcoin again. We know that. So this is where I think it's at. I'm going to stop my share here. And but this is what I think where we're at, Hank. And I'm just as happy as a lark. I like buying these dips because dips make me happy. Is it October? And I've said no. I've said no several times. But is it a time to accumulate? And I think that's the case. Look, you hear from these major institutions saying we're going to be $250,000. Well, I don't care if I'm buying it at 108, 109, or 120 if we're going to $250,000.
Yeah, a lot of upside there. But as you know, the saying goes, we're in kind of an interesting point right now, right? There's a lot of really great headlines, it seems like, for Bitcoin, but the world is still feeling like there's a lot of chaos going around. We have the Israel-Hamas thing, the Ukraine war is still very much real. We have these No Kings protests all over. A lot of
Government
chaos,
shutdown.
but as the old adage goes, right, the markets don't lie, people do. So my question for you, Big Beat, is that what you're seeing in the markets right now? It seems like there's actually an underlying level of support in the numbers right now, and up and to the right should still be what we're seeing for the foreseeable rest of the year, assuming no new, surprises come out of Washington. Is that kind of the sentiment you're getting right now?
As I always say, I don't even know what the Fed's have. I don't even know what I'm having for breakfast. How am I going to know what the Fed's doing? I don't know what the president's doing, right? I mean, I advise them.
Yeah.
But let's be honest here. I don't know what they're really thinking deep down. Are is some kind of grift again, or is Ukraine going to kick off? I don't know, and I had to prepare for that. I prepared for that in other ways, the VIX and things of that nature, and we can short Bitcoin as well. And that's what I think that's what this whale is doing to protect a bigger portfolio. But no, I don't think so. For me, looking at the market in perpetuity, I had to think about it in the future. I can't think about what's happening in the past. I got to think about what's going on in the future. I can't think about, okay, well, is Ukraine going to kick off, and is that going to affect my Bitcoin pile? Probably not. I don't know, and I don't care. The very first thing that I learned trading 35 years ago, once you got past the understanding of how technical analysis works, is that you're not just going up against yourself. A lot of people beat themselves up in the market saying, "Oh, I can't believe I missed that trade. I had a great trade. Yay!" Take the emotion out of the equation, right? Your personality, your feelings, your thoughts and prayers, the rest of the world doesn't care, right? The machine is a machine. It is something that we invest and we're buying it. You have to think about the philosophy and the psychology of everybody else out there. So you're looking at the psychology of not one person or one whale. You're looking at the psychology of a lot of whales, the psychology of a lot of people. So it's not just what you think based on your charts and based on what you believe. It's what everybody else believes too. Right? If everybody else doesn't think the same way as you are, and they think the market's going to go down, and they've got more money in it than you do, then you're going to have to go with the grain. So go with the flow, right? The trend is your friend until it's not, right? And the trend is still to the upside. Now you can say, well, there's a healthy pullback, and there totally is, and I love this healthy pullback. I take advantage of healthy pullbacks. I've said this in the show 4 or 5 times now. Be the ticker taker. As people are selling, buy what they're selling, and when they're still buying, sell it to them. Because they're usually on the wrong side of the trade. If I look at the number of people in the markets right now, 40% of the United States citizens have at least 1 to 100 shares of something, right? That means you're not participating against the average poor person. You're participating against very smart people with money. Right? You are participating in a world that is an adult world. It is not gamification. It's not how do I get my Robinhood E-Trade account and how do I gamify this? It's not. This is real money with real people, and they can't wait to take your money. Be the other person.
Yeah.
Be the person you can't wait to take their money.
Yeah, and you bring up a great point, Big Beat, and it's so hard in today's world to keep up with all these pro traders out there. They have all the tools that makes it almost impossible for little guys like me to compete. But you have developed an amazing product over at Quasar Markets that lets the average trader just do that by giving them all like a full 360 view of everything that's going on. Could you give us a little insight as to how that would work if I was someone looking at the market today and I wanted to really get a better understanding of what's going on using Quasar Markets, how I would go about doing that?
Yeah, that's a great question, and I appreciate that. I was sharing my screen now. QuasarMarkets.com. I mean, I built a machine that took me 35 years to make, right? My thought process of how the world works and putting it all together in one platform where we partner with NASDAQ and partner with New York Stock Exchange, ICE, and we partner with the big people out there. Seasonality charts like SeasonX. TradingView with some of the best charting out there. They're already in here. They're already partnering with me. And what I wanted to do was take it another step, right? And so you can log in here in any language that you want. It's an easy login, easy sign up. Google, LinkedIn, Facebook will have Apple soon. And you just log in. And as you log in, the machine becomes part of you. The AI becomes part of you. It understands you. It understands where you're at. And you can see the markets in any way you want. In this case, I've got stock screeners up. There's crypto. There's heat maps. I've got it all. Whatever it is that you want in this system, we put it in the system. You want to watch video. You want to watch screens. It's in there. And we built it with AI. So we built it with Edgar and Fred and the Quasar Markets AI. I'll pull that up for you here. But when people ask me about, well, how does your AI work? Well, I made it work when it works for everybody else because you were just asking about, there you go, U.S.-China trade tariffs. People were asking about it in our platform. I know what they're asking about. Right? And I can see what they're asking. How long should I hold Nugget for? They're asking about the gold market. That affects the crypto market. That affects everything. Right. So I wanted to put everything in one place. And I did it in a way that you can also look at databases. So you no longer just had to go to just willy-nilly and go ask Wikipedia what it thinks, but you can actually ask actual databases of what you're thinking. Like say, for example, press releases or news. And so like, for example, I just added the news, right? And so tell me about Bitcoin today. And all of a sudden, the machine can do that for you, right? And I'll apply it here.
Wow.
And I can type it in. Tell me about Bitcoin price today. And I wanted the machine to also not just give me the answer to that question, but to also give me questions and give me answers to questions I didn't even know to ask. I wanted to make sure that I understood the whole thing around it. So I wanted to get other AIs. Now we have 18 AIs in this thing, so it's not just one AI and we talking to it. That's not going to work. By the way, you need to have a machine that's more powerful than just one AI, and so we did that. So as this thing is talking about it, I want to understand the things around it, and the machine knows who you are. It knows, in my case, it knows I have a PhD level in finance. It made the doctor in Seattle knows, hey, you know what? He's a dentist, so I'm going to talk to him as if he's a dentist, and it's going to give me an answer as I've been asking to it. And it'll actually answer my question, even though I knew I typed in the question wrong. It actually fixes it for me. And that's what I loved about this thing too as well. And it also predicts as well. It also gives me everything that I didn't even know to understand and tells me where to go look and where it found it and timestamp it and make it better for me. The very second that I asked this question, it also gave me questions I didn't even know. So you just asked, how do political events affect the markets? It's already asking that question for me. It knows what we're thinking by what we're talking about and what we're actually discussing. Yes, and I've already won 4 awards for it. It's awesome. And we're building this machine in a way that nobody else has it. Right? But this is only one part of the machine. I built it it's going to have all kinds of cool things in it. And I can't even talk about it, but I'm excited about it in the next couple of months because there's going to be things in here that nobody else on the planet has. We're working on that, finishing it up now. But I wanted to make sure that all of that pieces were actually in our software.
Yeah, that's amazing. So I want to try this really quick with you, Big Beat. So if I'm a novice trader right now and today, and I wanted to know something, I want to see how this process would actually work. So what would be, because this can be a little intimidating, right? Even to somebody who's like a bit of a trader, who's not like so familiar like you. Like I'm looking at this and I'm like, oh, there's a lot going on there. But I got a feeling this is a lot easier to use than I'm realizing. So if I was a trader right now and I said something like, Bitcoin's at 111K. Where do you see it going toward the rest of the year and why? Is that something it could answer in real time or how does that process work?
Okay, let's just do it. Let's just ask, right? Bitcoin is at 111,500. Where do you see it going by December 31st? All right. And it's going to fix all like my spelling errors because I'm not the best speller in the world. And so it knows that, right? It knows all about me. It's as I use it, it's becoming part of me, and it understands my philosophy and my trading patterns. Will also is connected to the trading inside of it. It's really cool. We're building out things that are behind the scene, like algorithmics behind it that will integrate into the crypto space, into the AI as well. And we're going to ask the question, and now it's getting the answer now. You'll see it based on the latest information. Whale buy zone is at 90,000. This thing is beyond anything out there right now. That's what's cool about this product, right? But they're saying that the prediction that we're going to get to 130 to 140 by December 31st. With all the things we talked about. And if you just asked me the question, right? Here's things that I didn't even know. In Brazil, they're experiencing a shift in leadership. So that should help attract Bitcoin. They like Bitcoin over there. In Bolivia, I didn't even know this. Bolivia, Rodriguez Paz is the new president over there. That leadership tension could cause economic development for Bitcoin, right? Nigeria could bring more people to Bitcoin. All of a sudden, these are things I didn't know about that is adding to the news that is funneling all it out. We're not having to get FOMO about the guy shorting. He's probably wrong, by the way, because he's not integrating all the things that he's not understanding. I want to make sure I understand every part of this, not just one little bit of one little bit. I want to understand the whole world and how it's going to change. And if he starts to see this, is he going to change his mind? Is he going to understand a different world? And as I posted this, you'll notice that the question went into my live feed. Now everybody can see what I'm thinking. And of course, in your case, Hank, what you're thinking too, or asking.
Oh, that's very cool. Okay, one more. I'm like so... I'm so enchanted.
This news article just came out 57 minutes ago. I bet you didn't even see this news article.
Oh, wow.
That's how fast our platform is. In the past, AI was, way behind. It was a day or 2 or 3 days. No, I want to know up to the minute, up to the second of what's going on. In this case, they're saying it could be a crash to 90,000, but they're saying the buy zone is down to the 130, 140. There it is. And I pulled that from a news article. That's how fast and that's how methodical the machine is.
That's amazing. All right. Humor me. One more question. Here's what I would like to ask it. If we were to zoom out and look at this cycle, Big Beat, where does the Quasar market intel think we are right now? Are we still climbing toward, it sounds like new all-time highs? Is this going to just fade at the end of the year? Are we still in the cycle pattern even? Like, is it able to answer things that complex?
Yes, actually, we built it one step above all of this. Thanks for asking, Hank. If you'll notice on the right-hand side, so I've added the news on this side, right? So I'm going to clear it all. And if let's say you don't really understand the markets and you're trying to learn it, we also built Quasar Markets AI, right to the right of it. So you click on Quasar Markets AI. Now I've released the databases. And now I'm asking a full-blown Quasar Markets AI. This is another one we won all the awards for. So you want to know, tell me where we are in the economic cycle, right? Is that what?
Sure.
Is that right, Victor? Yeah. All right. Tell me where we are in the economic cycle. Okay. There we go. So we're asking the question. Right, now I want a bigger answer because you're saying, okay, I don't care where the answer comes from, but I want a true answer. So I'm going to ask a lot more databases. I'm going to ask a plethora of databases, all of them at the same time, and get a much better, clearer picture instead of me just asking the news what the news is thinking or what people are thinking on Twitter or stock tweets or whatever. I want to know on a much bigger picture. So here we go. Tell me where we are in the economic cycle. Now, when you ask those kind of questions, people are they're always like, oh, I got to know right now. Tell me right now. But I don't want that. I want the machine to give me a much better answer. So right now, it's telling me the growth slowdown in the U.S. GDP was robust in 2023 and 2024. It slowed in 2025, but we're projecting to be around, by the annual growth rate of 2025, to projected around up 2%. Globally, growth is also decelerating, with Morgan Stanley forecasting 2.9%, the slowest since the pandemic. So there we are, right? We know that. But late cycle dynamics, indicators such as high but plateauing GDP, and we're giving you all the answers. We're giving you a summary table for the other GDPs around the world. You can look at the implications. It's going to give you you're seeing it right now. Investors and businesses should expect slower growth, higher volatility, and increased policy uncertainty. All the things we're talking about. But not only that, I want to know where it
Yeah.
came from. Am I really getting this true answer from this? And now we took it out of the last question we asked from the news. But I want to know from everything. So here's the BEA numbers. Here's JP Morgan saying it, Deloitte, Fidelity, bigger picture things. I want to know exactly what they're saying. So I'm going to get the actual answer. Probably from prices you didn't even know to get it from.
Very true. Wow, that's amazing. And I hate for this to turn into a Quasar Markets commercial here, Big B, but like you're giving so much power, and you're putting so much power into the hands of the average investor. This must be really expensive, right? Like, can anybody afford this type of thing, or are there tiers? Like, how does that work?
If you can afford
That's a lot of
$15 a month, you can afford Quasar Markets. We are working on another process of this too, Hank, that in the future, it will be free.
Wow, it'll be free. Okay.
Free.
Well, I don't know why anybody wouldn't do this then. This is this finally lets us kind of compete with all the big boys out there who've been aggregating their info with systems that we have not been privy to for pretty much forever. So that's pretty freaking cool. Here's a question for you, and we'll come back to Quasar in just a bit because this thing's blowing my mind every time you bring it up. You know, one thing that has been really interesting, yet a lot of people would say uninteresting about this most recent cycle, is that this bull market seemed kind of boring. I know you like boring markets, but do you think that it is boring and that's how things are going to be, or is quiet strength exactly what smart money wants right now? Is that why things are feeling so boring? Because institutions are on it and the volatility of yesteryear might be just that of yesteryear?
So there is a saying in institutions called window dressing. All right. And a lot of people, especially the retail world, does not understand window dressing. The institutions, whether they are JP Morgan and Goldman Sachs, or, you know, it could be any Piper Sandler, you name it, right? They have to prove that they're making money every year. They got to show those numbers. And the end of September is when they got to do that. And what window dressing means is that they are moving money around in a way that's proving that I got lots of cash on the sidelines. I've got lots of stock. These are the companies that I'm invested in. We like this. And in my case, I moved a lot of money into materials. My thought process is that as inflation continues to keep its ugly head up here, materials will continue to go higher. Think of Dow Chemical, things of those companies like that. And that's my thought process. In fact, Quasar Markets also picked up on that too as well over this last few weeks. When I look at the window dressing of these institutions, they have not done their due diligence on the window dressing for the next quarter. They are sitting back and watching. They are not sure what the answer is for the next quarter. Now, Tom Lees of the world and Dan Ives and Dan Niles, I just had a chat. They're all saying we're going higher. NVIDIA going higher. The blockchain stocks, the AI stocks, the quantum computing will go higher. So tech will bring us higher. That's my philosophy too. And tech is what will get us out of the doldrums here. But I also believe that there's a wait and see attitude with a lot of institutions. They're not really sure. You heard from D.A. Davidson saying that they were also doing a bear raid right now, that they're actually shorting a lot of things. I'm not in that camp of either one. When I'm asked, and I was asked on Schwab Network just not too long ago, what I thought, we're going to go sideways. So we're going to see heavy volatility where we go up, we go down. We go up, we go down. And I think this is a trader's paradise. This is what we want to see if you're a trader. You know, you want to follow those trends upside and take some profit off, then follow to the downside, take some profit off, follow it back up and down and up. And I think that's what you're going to see probably for the next month or two. You just saw Quasar Markets, the AI side, telling you that, you know, inflation's still going to go up. GDP may not be as great. So there's a lot of mitigating factors. You also saw where Bolivia and look, all these factors I didn't even think about myself are now beginning to factor into my thought process of what I'm thinking about the future. So if I'm looking at the geopolitical side of the markets and I'm looking at the geopolitical issues, you know, Ukraine obviously and China, but if those things start to come off, so what do I mean by that? So I was confronted on my show 2 days ago on Friday saying, hey, you know, look, a dart in a dark room and you throw it, you're going to hit something bad, right? Tell me something good. Right. And that's a good point. Tell me something good. And I really couldn't do that. There was a lot of bad, right? But I think if you're starting to see any good pieces, any green shoots, as Greenspan used to say, anything that looks good, you're going to see his market ripping higher. But for right now, I don't see that. Right now, I see a lot of bad. If the China deal comes out and we have a deal with China, we go up. If we see Russia and Ukraine finally cut their deal and they split the country up, we get a deal, great. If Hamas finally sticks to their deal with Israel and Israel sticks to their deal and we have peace breaking out in the Middle East, my God, here we go. But not happening yet. So I think you're seeing institutions, I think you're seeing me, I think you're seeing, I mean, even the AI is picking up on it, that this sideways feel where we need some quote, clarity. The word that I always want people to understand is in the markets, and what institutions want to see and retail want to see is clarity. Show me things that I don't know. Give me clarity. Let me understand it, and then I can make a better decision. I can't make a really good decision. So my decisions are now based on technical analysis and what the latest tweet was. And I don't want to live my life by what the president tweets. I want to live my life and my trading by a bigger picture economic process. So that's what I'm doing. I'm not really paying attention to the tweets that much. I'm pretty much paying, well, it's a taco trade right now, right? So if you think about it from that perspective, what's really happening? I think you're seeing accumulation. I think you're starting to see institutions quietly behind the scenes accumulate while the retail is dumping. If there was these big OGs really shorting, then you wouldn't see 110, 111. I don't know, what are we at now? I think you would see 1995. Now, I see some people, including Howard Greenberg, president of ABCA on our show, says that we could hit 96. That's what his number is right now, 96,000. I don't think we'll see that, but he may be right. A lot of times he is. So I don't see that. I think it's a sideways market, and then I think we shoot up. And I think my machine's right. I think we see 130, 150 before the end of the year.
Yeah, no, I think you're right. It feels right now like the market's just kind of waiting for some real positive sentiment to act as the next catalyst up. Well, it seems like a lot of the big fish might be scooping up a little more Bitcoin from a lot of the retail out there that got a little wary around the low 100 levels. So I think you very well might be right on that. And Big B, right now everyone's waiting on the Bitcoin price. Bitcoin usually is the main event of things, but it does beg the question. If Bitcoin's the main event currently, who do you feel like is kind of the undercard right now that maybe we should be keeping an eye on? You said you've been investing into other materials. Are there any other assets, sectors, or indicators that you're watching that are flashing interest signals to you right now?
Yeah, in the crypto space, I love Solana. I think that there's a big move for that in Solana, and I think Tom Lee tells you Ethereum. I'm not into the meme coins so much because, you tell me what cartoon is going to happen, and I'll tell you which coin's the next one. But I'll tell you, there is an asset class that's kind of been overlooked a little bit that we haven't been thinking about, and that's the media sector. The media sector, think of it like Warner Brothers and Paramount. And here's one thing that I think a lot of people missed. And in my case, I've been buying it. Well, I was buying Apple, and I know that's boring to a lot of people because it is boring. But Apple, to me, it seemed like it had lost its way over the last few years. And I think the new iPhone 17 Plus Pro Max has been very good. The sales have been very good, but talking about that. But I think what they have been doing is they've been paying attention to that media sector. They picked up F1, all of F1 next year. You can't even watch F1 racing if you don't pick up Apple. Paramount is now partnering with Apple. So there's a lot more. And I think you're going to see that in the media sector. Expect Warner Brothers as be one that I think you could see. WBD is a ticker symbol there if you want to talk about crypto. But I also think that the banking sector is going to wake up. What? We don't like the banking sector. Yes, I understand. It's old school and I don't either. But I will tell you they're waking up. I think that you saw JP Morgan and Goldman Sachs set their foot finally down and say, okay, we'll offer ETFs, we'll offer custody. Wait till you see, and we're seeing it now, regional banks are hurting. They realize they're losing money to people taking their money out, going to bigger banks, or they're going to the markets. To me, Coinbase and Gemini and Kraken, they are accounts. They are a bank. And a lot of times, I'll tell people, Bitcoin isn't crypto to me. Bitcoin is actually money to me, right? I use it. I buy things with it. I do spend it. So to me, we need to stop saying the word crypto a lot of times, right? We need to say the word money because it is money. But when you look at it from the perspective of purchasing things, I think that's the next thing you're seeing. One of the other things that I think you're starting to see is technology starting to go into the way we do transportation. So we saw in Las Vegas, a lot of these taxis are now being driverless taxis, no taxi drivers. Waymo and Zoox are now taking over in Las Vegas, Wait till you pay with crypto. Wait till you pay with that Bitcoin. Wait till you start using it in a way that you didn't even expect to be spending that money. I mean, I haven't pulled a credit card out in ages. I mean, I tap my phone into a machine now, right? Whether it's a credit card or my Bitcoin.
Yeah.
The way that we live is changing very fast. The way that we act when we also live, meaning wearables, are also changing very fast too. Your watch, your Oculus, your glasses, I think that's coming super fast. I also think if you start to combine those things, the way that we move around the country, the way that we act socially, the way that we think socially, the way that we get our data like Quasar Markets, this is going to change a whole ecosystem. And when you start to see that change and people understand that change, that's when crypto is really going to explode. When like, oh my God, you know what? Actually, Big Beat and Hank were right. I do need to have crypto in my portfolio. It won't be a $4 trillion asset. It'll be a $4 quadrillion asset. And that is why I think we're going.
Yeah, we're certainly in some unprecedented times with new technologies that are going to cause huge changes to the way we look and live and see the world, and that could be in just the next 5 years. I think about those they're kind of new now, like the Meta glasses are going to be recording stuff all the time. Like, what is the information that they're going to be able to mine from everyone in real time that are wearing these glasses and then repurpose elsewhere, like in places like Quasar Markets? You might have Larry Fink wearing a pair of glasses. They hear him talking about a trade, instantly moves markets or something, right?
Hey, I just saw Hank and Steve in my glasses talking about crypto, and I need to get into this. Right. That's what I'm saying. And you know what? And it's going to be where our social aspect of how we deal with each other will no longer be in our head and our phone all day long. We'll be able to look forward. We'll be able to have more communication. And I like that. I like the social aspect of where the economy and the markets are going. And I think right now, if you're not in the blockchain space, if you're not in the crypto space and the new money, you're going to be on the outskirts. If you think about it, at the turn when the internet first came about, there were many people who were against the internet. I'm not getting the internet. I don't need that computer. Those people did not participate in the new economy, and they got hurt. It's the same thing happening now, right? If you had bought Bitcoin with us at 75, a lot of people would just be smiling. Okay, well, Big Beat, I wasn't around. You're older. Yeah, I wasn't around when Bitcoin was that price. If you think about it from this perspective, Hank, I grew up where there wasn't internet. That's how old I was, right? The next generation
grew up with too.
Yeah, okay, all right. There was an era, right, where those kids didn't understand the world without not growing up with a cell phone. The next era did not grow up with not understanding the internet. The kids today are growing up not understanding, not living in the world of AI, right? So the next crop of kids coming up will be like quantum computing is just how it was. It's how we grew up. That's what we do, right? So this changes are happening. But the changes in the 30s and 40s and 50s and 60s technology, the 70s, 80s, and 90s was faster. 90s, 2000, 2010s, look at it now. The speed of technology moving even faster. There's going to be a subsector of the economy that's not even going to participate. And when they finally do participate, we're already going to be sitting pretty because we're already going to be owning the crypto. We're already going to be going, hey, you know what? They're chasing now. We don't chase anymore. We can just sit back and watch the pretty line go from far left to top right.
Yeah, and the internet for sure has certainly acted as an additional type of lubricant for all of these new techs that are coming out now, and the adoption is just so much faster because it used to be for checks and then credit cards, the internet, it was like a 15 to 20 year adoption cycle, but everything happens in a much more compressed timeline now because I can send stuff to you instantly or see stuff whenever I want on Quasar Markets.
I'll send you my Bitcoin, I'll send you my blockchain number if you want to send me some crypto, Hank, no problem.
There you go. Love it. All right. Speaking of Bitcoin and crypto, I want one final thing we're going to do with you here before we let you go today, Big Beat. Let's go to camera 3 here, guys. Now, we've played this game with a lot of our guests, but we haven't had the opportunity to play it here with you. And yours is going to be especially fun because it's also powered by Quasar Markets. So on our right here, we have our end of 2025 Bitcoin price projection chart. So December 31st, 2025, clock strikes midnight. These are our guesses as to where the Bitcoin price will be by some of the biggest names in the industry. So right now, the highest bid we have is 443 by Knut Svanholm. You'll see we got Grant Cardone in the 134 arena. I'm around 142. Yeah, he was great. If you had to guess, Big Beat, you said Quasar predicts 135 to 140. So the Quasar mark prediction, I'm going to say, is 137.5. We'll split the difference. What is your personal prediction for where Bitcoin will be at the end of this year? Because whoever gets it right, I'm sending a personalized Roxom Patagonia to, and I hope it's going to be for you. So what do you thought? End of this year, bull run might continue, but by the end of 2025, where do you see Bitcoin's price at for shits and giggles?
Here we go. Ready? 138,950.
Why is that? Support your answer. I want to hear why. Tell us the class. How'd you come up with that answer?
Because I think a lot of you are looking for the 140 handle, and a lot of times people take that profit off before it hits a rounder number. The 135 is going to be tough for a lot of people. Once we get up there, it's probably going to just bust through that, and then we're going to get right to it. So yeah, I think it's like 138,950 is right. We're about right somewhere in that range. And I think it'll probably happen sometime right before the holidays, as it goes through the holidays. And then it's going to keep picking up and picking up and picking up. So probably expect by the 1st of December, like 128, 129, 130-ish in that range. And then you'll start to see the slide up as the FOMO starts to hit.
I love it. Oh, I love how your numbers always are chart mechanics supported by overall market sentiment, because we always know it's an influx of those two. So we appreciate you giving your insight on that there, Big Beat. Well, that I think about wraps up our time today, Big Beat. Before we let you go, though, is there anything else on your chest you want us to know about? Or, I'm sure you've gained a lot of fans here on the show today, places they can check you out for your big beats themselves and maybe learn more about Quasar markets if they're feeling so inclined. Where can I send them?
Yeah, on x.com, you can find me at QM Big Beat. You can find Quasar Markets, same thing. Quasar Markets is the handle there. You can find me on LinkedIn. You can find me on everything pretty much. But if I had one final thought and one thing on my chest, it's a big heart to Roxom and to Hank, man. I really love what you guys are doing, man. It's good stuff.
Oh, we love what you're doing, buddy. You're putting power into the masses so we can fight against the big guys for once on a fair playing field. So it's a long time coming, and we're thankful that you're bringing it to all of us. So thank you, as always, for your time, insight, and expertise, Big Beat. Can't wait to see you next week, sir. Enjoy the rest of your week, my friend, and thanks for joining us.
Thanks, Hank.
Cheers. All right, we're taking a quick break here at the Blockchain Report, but when we're back, we got more of today's top news stories and a lot more coming your way after this quick break. Are you interested in effortlessly growing your Bitcoin portfolio? I sure am. Well, the Bitcoin credit card by Gemini earns you Bitcoin back on every purchase. You can use it like any credit card. You can buy lunch, gas, your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. All that with no annual fee. And right now, you can grab a $200 Bitcoin welcome bonus. It's the easiest way to start building your Bitcoin stack. Just go to Gemini.com to learn more.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed two brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
All right, welcome back. It's time for more of this morning's top stories in our bull run. Let's get on in it. The Federal Reserve, the same institution Bitcoin was literally designed to make irrelevant, is planning on hosting a payments innovation conference tomorrow. The theme, crypto, stablecoins, AI, and tokenized products. This will be one of the first official dialogues between U.S. central bank officials and crypto industry leaders, a sentence that would have sounded like satire only 5 years ago. The conference will take place in Washington, D.C., with opening remarks by Fed Governor Christopher Waller, who will presumably spend the first 10 minutes assuring everyone they're still very much in control. Right? Got everything under control. The Fed says it wants to consider a broad range of perspectives on improving the payment system, or in other words, they want to know how the people they've been side-eyeing for a decade keep building better financial tools than they can. And to their credit, they actually invited heavy hitters from Chainlink, Fireblocks, Circle, Paxos, ARK Invest, Coinbase, Stripe, Google, BlackRock, and JP Morgan. The whole thing will be live streamed on YouTube, which is great news for anyone who's ever wanted to hear the Fed explain stablecoins like it's their first day using Venmo. Now, what does this actually mean, or why does this matter? Well, this matters because this isn't just a meet and greet, it's a pivot. For the first time, the Fed isn't dismissing crypto, they're actually asking for help. After years of calling Bitcoin a speculative fad, the same people who print infinite dollars are now hosting panels on tokenized money. Now, if the tone leads friendly, it could fuel institutional adoption and boost confidence across the market. If they lean regulatory, well, expect temporary volatility and 1,000 think pieces titled Crypto Winter Part 2. But make no mistake, this, my friends, is a turning point. And for the first time in history, you can now trade the S&P 500 and gold in Bitcoin terms. Because why benchmark your wealth in melting dollars when you can use the only money that hasn't lied to you? Roxom launched Bitcoin-denominated perpetual futures, letting traders benchmark and trade traditional assets directly in BTC instead of fiat. This, my friends, is a big one. It's a step toward Bitcoin as a unit of account, not just a speculative hobby. It comes as de-dollarization ramps up worldwide, and institutions are starting to treat Bitcoin as more than a meme. According to Bitcoin treasuries, public companies, ETFs, and even sovereigns now hold $150 billion in Bitcoin. That's up 400% year over year. Roxom co-founder Borja Martel Seward said, "For decades, markets have been priced in currencies shaped by politics. Now we're creating a neutral, transparent, global standard." Their platform runs 24/7, bridging traditional finance with the Bitcoin economy, and positioning BTC as not just a store of value, but the foundation for global capital markets. And here's the really fun part. When you start measuring things in Bitcoin, the world, well, it looks a little bit different. Gold, while hitting record high in dollars this year, has actually fallen 45% first BTC since January of 2024. The S&P 500, also at all-time highs in USD, has dropped 35% in Bitcoin terms, sliding from 0.12 BTC to 0.078 BTC per unit. Or, in other words, if you measure in sound money, the best performing assets are, well, underperforming. Roxom move could accelerate Bitcoin's evolution from currency to accounting layer for global finance. When major benchmarks get priced in BTC, it changes how institutions hedge, how traders think, and how the world measures value. Gold and the S&P still move, but in Bitcoin terms, they're moving the wrong way. And our Lord and Sailor, Michael Saylor, is back at it again, adding more Bitcoin to his strategy pile like it's a Costco bulk order. Now, while most companies are still arguing about AI policy or office snacks or whatever, Strategy dropped another $18.8 million to scoop up 168 more BTC. Because when you already hold over $70 billion worth of Bitcoin, what's another 18 mil between friends, right? This latest haul brings Strategy's total stash to 640,418 Bitcoin, worth about $71 billion. That's over 3% of Bitcoin's entire 21 million supply. Strategy's buying spree didn't slow down even during the downturns this year. They've been stacking through the market dips, Fed chaos, and whatever Elon's tweeting about that day. All of this is part of their so-called 42-42 plan, which is literally an $84 billion strategy to buy Bitcoin through 2027. Because if you're already the biggest Bitcoin holder on Earth, the only logical next step is doubling down until your balance sheet is the blockchain. And Elon Musk is threatening to leave Tesla if he doesn't get his giant compensation package, which, by the way, could be worth up to $1 trillion. Because apparently, if it takes $1 trillion, apparently it takes him $1 trillion to actually keep Elon interested in things. Shareholders are set to vote on the new deal, and analysts are calling it, well, what it is. Kind of ridiculous. I mean, Reuters reported that even if Tesla's growth is below the S&P average, Musk could still walk away with $20 to $40 billion. So he'd get a historic payday for underperforming. Now, under the package rules, Musk could make the largest CEO payout in history, despite delivering returns that would get other CEOs fired. Critics say the package is basically a Trojan horse, dazzling investors with impossible $20 trillion dreams, while quietly guaranteeing Musk another record haul, even if the stock just sits there. One analyst calls this Tesla dilemma, because Musk's overhyped promises about self-driving cars and robot armies might keep Tesla stock inflated, but the moment he walks, that balloon pops. Shareholders are basically trapped in a game of financial chicken with the world's richest man. Vote no, and, well, your stock crashes. But if you vote yes, well, you just made him even richer for doing even less. So congratulations, Tesla investors. You're paying ransom for your own CEO. Get out of here, Elon. And millions of Americans hit the streets this weekend for the No Kings protests, and the White House responded the only way that it knows how, with AI memes. President Trump and Vice President J.D. Vance both posted images of Trump in a crown, but Trump's version showed him flying a fighter jet labeled King Trump and dumping sewage on protesters. Let's take a look at this very AI yet very real video. Take a peek. All right, so here's the plane. It's taking off. Well, and he's wearing the crown. That's got to be against FAA regulations. I don't think they allow that. Oh, boy. And this has some kind of... Oh, no. Mind you, ladies and gentlemen, this is our president who posted this video. And he's really getting those protesters good in that Trump F-15... Oh, my God. This is the world we live in, folks. Well, the protesters, they came right after Trump, after he commuted George Santos' 7-year prison sentence, proving once again that in modern politics, consequences are optional if you're loyal enough. The same analysis points to Trump's demanding investigations of enemies, then getting indictments a week later, and authorizing CIA operations in Venezuela while labeling drug cartels as terrorists, a move Senator Rand Paul says violates Congress's war powers. Meanwhile, the administration kicked out journalists who refused to sign the new press regulations, which really brings that whole no Kings branding full circle, right? Yeah. Now, the protests themselves were pretty huge. 2,700 events across 50 states, with organizers claiming around 7 million people turned out. From D.C. to Portland, the signs all said, "No Kings." The White House's response? A single email statement just reading, "Who cares?" Well, it turns out you don't need a throne to sound imperial. The analysis argues this was clever politics for Trump, playing it off as humor while the rest of the world, went crazy. So, this is what it is. And Jack Dorsey, well, looks like he woke up and chose violence, and then he tweeted, "Bitcoin is not crypto." 4 words, 4,000 comments, and roughly 1 million confused altcoiners scrambling to explain why their JPEG coins count as innovation. Dorsey, the Twitter founder turned Bitcoin missionary, doubled down, saying the word crypto never even appears in the Bitcoin white paper. And he's right. Satoshi never used the word once. He called Bitcoin a peer-to-peer electronic cash system, not a casino. Dorsey's argument is actually pretty simple. Bitcoin is money. The rest of the market is tech stock cosplay. He pointed to Square's zero-fee BTC payments rolling out in 2026, where farmers market vendors are apparently selling avocados directly for Satoshis. His company, Block, is building the rails, Lightning is the network, and Visa executives everywhere are suddenly sweating through their suits. But of course, not everyone agrees. Critics claim that Bitcoin's too slow, too limited, and too un-DeFi-ish. Meanwhile, Dorsey's supporters are busy saying he might be Satoshi because, well, the internet loves a conspiracy. The evidence? Well, some old cryptography notes, a sailor reference in Satoshi's code, and the fact that Dorsey lived in California once, which is about as convincing as saying Jeff Bezos is Banksy because he owns spray paint. Regardless of who wrote the white paper, Dorsey's point lands. Bitcoin doesn't need to be crypto. It already won that argument. It's not a tech demo, it's money. And whether he's Satoshi or not, he's definitely the loudest guy still reading his homework from 2008. All right, we're taking a quick break, but when we're back, we're going to talk about why Andrew Tate is in the news and what he's saying about Bitcoin crashing. Oh, sounds official to me. All that and much more coming back right after this quick break. All right, welcome back. It's time for more of this morning's top stories. And this most recent news that I guess we're calling a top story involves infamous internet personality Andrew Tate. And he's officially returned to financial commentary because apparently there weren't enough car crashes in his life already. In this latest clip, Tate warns that Bitcoin could drop to 26K, describing the market as a car accident where you lose your whole family and an arm, which is certainly one way to say correction. Okay, he claims that too many traders are still overly optimistic and that the market won't bottom until everyone gives up hope or possibly consciousness. Now, he's not totally wrong about psychology, I guess, but maybe ease up on the amputation analogies, champ. Bitcoin's been trading around, between like 106 to 111 for the last couple days, cooling off after some October highs that we saw not too long ago, with ETF outflows and forced liquidations adding fuel to the drop. Hundreds of millions in leverage got wiped about a week and a half ago, proving once again that degens can't resist pressing 10x. And some analysts say a sharp correction is possible if liquidity dries up. Others say, that it's all just noise, and these dips are how strong hands steal cheap coins from paper ones. So sure, Tate's $26,000 call makes headlines, but it is worth remembering calling for Bitcoin's collapse has a 100% failure rate over time, because while influencers crash cars in metaphor, Bitcoin keeps driving uphill in reality. All right, let's see what's going on over at the RoxomTV Twitter/X page. This is the best place on X to see what is going on in the world denominated by Bitcoin. So let's go through our list here and see what we got. So here's one. This is interesting. This one was just 41 minutes ago on the RoxomTV page. The alleged White House insider Bitcoin whale has added to their BTC short position. They are now short 21 million with a 10x leverage. Interesting. That sounds like insider trading at its finest. How is this not illegal? I don't know, but this is the world we live in, I guess. So I need to get a job at the White House. Pelosi, is that you? That might be her. I don't know. She's always on top of things. Let's keep scrolling down and see what else the page has to offer us today. Okay. Former Binance CEO Changpeng Zhao predicts Bitcoin will flip gold. Non-believers will turn into believers. It's a matter of time, he says. Well, let's look at the numbers here quickly, gang, right? Bitcoin's sitting currently around, I think it prices now like $2.2 trillion in total market cap. Gold, with its recent surge, I think is around like 26 or 27 trillion. So we'd have to 10 or 11x gold for that to happen. And if we 10 or 11x gold at that valuation, then that puts Bitcoin, if Bitcoin's at 27 trillion, we're looking at 10 to 12x from where we are right now, which seems pretty darn good. That puts Bitcoin in the $1 to $1.5 million range. So CZ, I hope you're right, buddy, selfishly, but All right, moving on. Let's see what else we got. Just in, NASA confirms Earth now has a new quasi-moon until the year 2083. Even the moon is inflationary. There will always be just 21 million Bitcoin. This one's fun, and I think we're all ready for a second moon. Out with the old moon, in with the new moon. I'm here for it. Apparently, we only get it till 2083. So if my math is mathing, what is that, like 58 years or something? So that's something to be excited about, and I'm here for it. All right, last one we got here. If you're walking around New York City today, or if you've been checking out some of our ads we've had playing, today is the day that we announce the next big short. So you should see these ads playing on buses and elsewhere around New York. What does it mean? Well, you're going to have to go to Roxom.com to check it out. Big news happening there. We talked a little bit about it on the show, but I don't want to spoil the surprise for you now. So if you haven't already, go check out Roxom.com so you can start seeing the world in Bitcoin denominated terms. It will change the way you look at everything. So make sure to check it out as the next big short is underway starting today. All right, we're going to take a quick break, but when we're back, we got more news stories underway, and we'll be wrapping up today's show in just a bit with a little bullish, bearish, or BS. So we'll see how things are looking in terms of Bitcoin as we move forward to the second half of October. We'll be back with that and more right after this message. All right, welcome back. It's time for some blockchain without borders. And let's get started with things across the pond as BlackRock has officially launched a Bitcoin exchange-traded product in the UK because apparently the British finally realized that crypto bad wasn't the best long-term strategy. The iShares Bitcoin ETP, trading under the ticker IB1T, kind of like IBIT, hit the London Stock Exchange, giving UK retail investors a way to actually own Bitcoin exposure legally for the first time ever. Each unit starts at about $11, so for the cost of a pint and a half, you can now buy a sliver of the world's most powerful asset. Unlike those sketchy derivative products regulators hated, this one's 100% physically backed by real Bitcoin, held by Coinbase under cold storage and multi-party computation, which sounds fancy but basically means we're not going to lose it all like FTX did. Now, this move comes after the Financial Conduct Authority finally loosened its 4-year crypto chokehold earlier this month, lifting the ban on exchange-traded notes and saying, fine, maybe we overreacted just a little. The FCA's David Giel said the market has matured, or in other words, we can't ignore this anymore because everyone else is making money. Now the UK joins Germany and France in allowing Bitcoin ETPs, officially signaling that the age of crypto cowboys is giving way to crypto suits. Globally, BlackRock's crypto arm is already flexing with over $85 billion in Bitcoin ETF assets. And with this UK launch, they're eyeing a huge retail and institutional market that's growing faster than the British housing crisis. Recent research shows that 21% of UK adults are expected to invest in crypto for the first time in the next year. That's right, 1 in 5 Brits will soon be holding Bitcoin while still pretending to hate Americans. Bitcoin is currently trading around 111K, up about 3.5% in the last 24 hours, pushing the market cap to over 2.2 trillion. And this ETP is only going to add more fuel to that fire, because when the world's largest asset manager with $13 trillion under its belt starts selling Bitcoin exposure to tea-drinking investors, you can bet the orange coin isn't staying under 6 figures or staying for much long. So I think we are going to be surprised if we ever see that under 6-figure mark again, but who knows? And in other news, Bolivia has elected Rodrigo Paz Pereira as its new president. And his slogan might as well be capitalism for the poor, socialism for the rich, and a tax pardon for everyone else. The 50-year-old son of former President Jaime Paz Zamora beat Jorge Tuto Quiroga in a runoff, winning 54.4% of the vote. Paz previously served as the mayor of Tarija, a congressman, city councilor, and currently a senator. So yeah, he's a fresh face in the same way that McDonald's is farm to table. Still, he managed to pull off a political miracle, luring voters away from Evo Morales' MAS party by pitching himself as a moderate reformer promoting capitalism for all. Analysts call his victory a triumph for plebeian Bolivia, since 80% of the economy is informal. Think freelancers, small traders, and people allergic to paperwork. Now, Paz's message was, we're going to liberalize, but not for the rich. We'll do it for the poor. At rallies, he promised no more smuggling because everything will be legal. He also vowed to lower tariffs, cut bureaucracy, and offer low-interest loans, all without borrowing from the IMF. His plan instead? Budget tweaks and anti-corruption. Basically, fix the economy with vibes. He also proposed a mass tax pardon for giving debts and fines as part of a small money plan to revive Bolivia's shrinking GDP. Now, born in Spain in 1967 during his father's exile, Paz lived in 10 countries before returning to Bolivia at age 15. He studied economics, earned a master's in political management at an American university, and married Maria Elena Urquidi, with whom he has 4 children. 2 years ago, we spent time touring over 200 towns, attending local festivals and parades, basically a political pub crawl across Bolivia, and it worked. People said, this guy, he knows us. Analysts also point to his choice of Edmund Lara, a former cop turned anti-corruption crusader, as a key to his victory. Because if you're running against both the old right and the old left, it helps to have a sidekick who hates both. So now Bolivia's new president says there'll be no smuggling, no IMF, and no debt. Just legalized capitalism and a government that promises to tax less, forgive more, and liberalize for the little guy. And if it works, it's revolutionary. If it doesn't, well, at least it's new branding. We're taking a quick break, but when we're back, we're going to wrap up things up for today's show with a little bullish, bearish, or BS and see which way Bitcoin is trending as we enter the second half of October. So all of that and more coming back right after this quick break. Do you wish you could grab cash without selling your Bitcoin? Yeah, same. But hey, that's why Ledden exists. They're the global leader in Bitcoin-backed loans. Over $9 billion issued since 2018 with a perfect record protecting client assets. Now you might be asking, what makes a Ledden loan different? Well, with custody loans, your collateral, it stays put. They don't go degen and lend it out for yield. There are no credit checks. It funds in under 6 hours. No monthly payments. You can repay anytime with zero penalties. And for transparency, grown-ups actually want proof of reserves reports every 6 months verified by a top accounting firm. Bottom line is Ledden lets Bitcoin holders unlock liquidity without selling. You can check it out at ledden.io/RoxomTV. That's LEDN.io/RoxomTV. All right, boys and girls, it's that time of today's show where we wrap up this fine Monday with a little bullish, bearish, or BS. This is the part where we recap today's top stories and see how they're looking in terms of Bitcoin going forward. So let's recap and give us our diagnosis today, shall we? Let's do it. First up, a massive AWS outage took down huge chunks of the internet this morning, including Coinbase, Reddit, and even Disney+, all because one Virginia data center tripped over its own Ethernet cable. Experts say it wasn't a cyber attack, just a technical fault. Ooh, my verdict on this. Okay, when the backbone of the internet collapses, it's not exactly a great look for the whole digital revolution. Bitcoin may be decentralized, but the apps, the exchanges, and wallets people use to access it still rely on the same fragile interwebs. A reminder that true decentralization still has a single point of failure: Amazon's plug, apparently. So if AWS sneezes, the crypto market catches a cold, and because of that, I'm feeling bearish on that first story. Next up, President Trump insists the Gaza ceasefire is holding, even as both sides keep firing rockets and exchanging accusations. Peace talks continue, but the situation remains volatile and politically charged. Ooh, my verdict on this one. I feel bearish on this one too. Not a great start. I mean, come on. War, uncertainty, and political tension usually fake drive up gold, not Bitcoin. Get out of here, Donald. Now, investors still see BTC as a risk asset, not the safe haven it's supposed to be. So until markets fully detach from traditional fear cycles, global instability keeps traders cautious, not euphoric. So missiles flying don't make for moon missions, unfortunately. So I'm calling bearish on this one too. 2 bearish, 0 bullish, 0 BS. It's a dark day so far. Let's see if we can finish on a strong note. Last up, we got Roxom. They just launched Bitcoin-denominated perpetual futures, letting traders benchmark gold and the S&P 500 directly in BTC. Truly a world's first. This is a major step toward Bitcoin as a unit of account instead of just a speculative asset. I mean, I am very bullish on this one, gang, obviously. I mean, this is Bitcoin stepping into the grown-up table of finance, right? When major benchmarks start being priced in BTC, it normalizes Bitcoin as money, it attracts institutional players, and it slowly erodes the dollar's monopoly. Over time, that is rocket fuel for Bitcoin's global relevance and its price. So Bitcoin becoming the yardstick, that's not the gamble. That, my friends, is bullish. So let's recount today's score. We have 2 bearish and 1 bullish. But let's be real, that bullish story hits a lot harder today. Roxom's Bitcoin's futures are long-term structural progress. And while AWS and geopolitics are temporary nosedives here, overall, today is actually leaning slightly bullish. Cautious, but strong under the hood. So despite the 2-1 score, things are looking better than they might appear at first glance. Well, gang, that is a wrap for another Monday edition of the Blockchain Report. As always, thank you so much for tuning in and joining us today. And if you haven't already, make sure to just do me and yourselves too a quick little favor and make sure to like, follow, and subscribe to RoxomTV, the Blockchain Report, and Hank at RoxomTV on all platforms you choose to get your financial news and humor on. And we'll be back the rest of the week at our normal time, which is 8 a.m. Pacific time, Tuesday through Friday, although tomorrow I do believe there is a conference playing in lieu of our show, so we will be out of the office tomorrow, but here in spirit. But we will be back at our normally scheduled time of 8 a.m. Pacific time on Wednesday through the rest of the week. Remember, on Monday, we're on at 10 a.m. because, things happen. So, as always, thank you again for tuning in. And until I see you next time, which will be Wednesday morning, as always, make sure to stay safe, stay informed, and always, always, hodl on. See you guys next week.